What's up, crypto junkies? It's Jay, and in this video, we're about to get into portfolio strategy. Yes, welcome my friends. It is 2018. It is the first quarter of 2018. Expect me to start shooting more of these videos. So what I'm talking about is passive versus active investment strategies. And active means simply, again, that you are active in it, and passive means that it's set and forget. Like I said, I had done internet marketing before and worked online, and I get the appeal to a autopilot, automatic money system. But in reality, a lot of things in crypto are actually active investments, and most people treat them as passive. And I think that's where people get into a lot of trouble. Also too, now we've had a good 6 months runtime of running this community. So I've gotten to see a lot of real world scenarios, a lot of real world people go out and attempt to build a portfolio. And I've gotten to see a lot of the things done right and a lot of the things done wrong in terms of strategy. Now, I'm a firm believer that you get better as you go, right? So one of my goals is to always just get better. It's not about knocking out of the park and making $1 million overnight. It's like it takes you 10 years to become a millionaire, and then you become a millionaire overnight. What I'm about to share with you and what I'm about to break down, I feel like a combination of this and pulling and taking pieces out that you like, that fit you and your personality, I think will really be the best strategy for you. So think of it more like I'm giving you a bunch of little pieces for you to make your own puzzle versus I'm trying to give you some definitive strategy and you run with this and this is the end all be all. Because let's face it, in the investment game, there is very polarizing attitudes and mindsets. And you can see that on YouTube, you can see that in books, you can see that in modern day society. I guess a very subtle approach, which is more of a Benjamin Graham style, and you have a very aggressive strategy, which I think would be more of my style. Everything in between is all fair game, okay? So I want to really spend some time and talk to you about passive versus active investment strategies. So let's go ahead and get started and write some stuff on the board. First, I want to talk about passive. So what are true passive investments in crypto? That would be more fundamental things too. I'm just gonna note this with a generality that it's more fundamental, okay? So, passive. So a passive portfolio, okay Jay, now we can spell. Whoop. A passive portfolio would involve things like investing in blockchain technology itself. This would be investing and being an advisor into an actual ICO. So ICO investment, not on an ICO with coins investment necessarily. ICO investment, this is more of an advisor or a core investor that got them basically up to speed with where they need to be to do the ICO. It's not investing in the coin itself and buying 100,000 coins when it comes to ICO, right? It's not necessarily that. It's actually investing in the core, the fundamental thing. Blockchain, same thing. We have investing in any infrastructure, really. I don't think that's right, but that's okay. Anything infrastructure-wise, so that's mining, whether that's the rigs itself, leasing the building to whoever wants to expand on their mining operations, that's providing the hardware to actually mine. That is any piece of this. And again, think of these passive pieces as the more core, foundational, fundamental things. And the thing I'd put at the very bottom, which is sort of kind of passive, is to have a holding strategy with your coins. So that means like getting a sizable amount of Bitcoin or an altcoin that you truly believe in, that you've done your research on, that your due diligence on, and you believe that over the next 1 to 5 years, that will be a solid strategy, okay? So we're gonna say core coins here, and we're gonna hodl those. And one more thing I'll say here would be an index. And if you just compare what I'm talking about in this video versus the very first portfolio video I shot, I probably sound like a complete idiot in that video because there's so much more that we've learned now. There's so much more experience that I have. I understand much more than I did before, right? I think a lot of these are obvious, but I think most of these don't fit your $5,000 to $10,000 investor. This is more geared towards $100,000 and up. Investing into infrastructure in mining or some sort of operation, I think would even be higher than that, because to give you an example, BitClub, which is a interest-paying mining pool, well, they turned down $150 million to help them build up infrastructure, because the guy's story, if you've read it, he's all about the little guy, and he wants to really help people that are regular, everyday Joes, just like him, become financially wealthy or rich, whatever you want to consider that, okay? So something like that, you could even argue, would require a sizable amount of investment. Blockchain technology, again, look at who's investing in blockchain. A lot of hedge funds are getting into that. Crypto hedge funds, that's another passive income strategy that you could get into. Let me add that, I actually forgot about that, which would be a crypto fund or a hedge fund, whatever you want to call it. Okay, what we're hedging is the crypto market itself. So you give your money up to somebody that you believed in, trusted in, and they would go out and make moves for you in the market. This, I believe, is open to any level investor. There's gonna be somebody that could actually help you with this. Actually, let me move on this side. In index, same thing. There's a couple of full service tools that exist now that can help you with this. One being coincube.io. I don't know at the time of shooting this video and at the time of you watching this video, it might not be available anymore or it might cost money. As of right now, that is a very popular tool in the actual crypto junkie community. We're actually working on our own as well that we want to roll out. I don't know if we'll charge for it or offer it for free. I don't know at this point, but we're working on our own indexing tool. And index is just a small sample size of an overall much bigger market. You can have a top 10, top 15, top 30, top 50 coin index. And again, this really fits. You can start this with as little as $250, $500. And you can go, sky's the limit with this. We have people with hundreds of thousands of dollars in an index, okay? Crypto hedge funds, same thing. I really believe that this is suitable for anybody $1,000 and up, depending on who you're going to. Make sure the fees don't eat you up and kill you. With index tools, make sure that it's actually indexing and constantly re-indexing on a constant basis, okay? Core coins and holding it, this I don't really think requires that much skill set. Knowing basics of how an exchange works and then being able to absolutely execute trades, buy and sell, and all that would require is for you to decide what coins you wanted to hold, how much of each, in dollar amount or in coin amount you want to purchase, and that would determine your entry point for that. And then what I'd suggest on this is you're going to need some sort of hardware wallet to store all this stuff and just cold storage that, take it offline. You might even want a paper wallet that, and you're gonna sit on this for at least 12 to 24 months. Everything in this passive strategy is I'm assuming beyond 12-month strategy, okay? For most people, passive is like 5 years and beyond. I think crypto, that's a little too long of a lifespan to put on this stuff. It'll change way too quickly. I probably should have mentioned this in the beginning, but we're gonna see big changes in 2018 in terms of regulation. So this video, you'll notice, will get shot multiple times throughout this year. I will do an updated version of this because regulation will keep changing. 2018 will be the year of regulation on exchanges, on taxes, on lending programs and ICOs all over the world. It will be the year of taxation, rules, and regulation, okay? So ICO investment, I told you again, being an advisor requires one of multiple variables, but a couple of the big variables is you got a lot of money or you've had some business experience in an area that they need, AKA marketing. I've been approached to be an advisor for several ICOs because of my marketing background and my marketing skill set. It's like money or skill set related that you're usually offered or wanting to take an advisory role. Core investor, again, that's a money play to get in and help them build out what needs to be done to then take it to ICO because it's not cheap and it requires startup capital, okay? Blockchain technology, we already covered that. So these are really your passive income strategies. If I really wanted to split hairs on this and add one last one, it would be mining itself. I don't think it's really profitable to mine as an individual, to mine Bitcoin, but I do think it's profitable to mine a lot of the altcoins. A great example of that would be Electroneum. We have a lot of people in the community right now as I shoot this video that are mining Electroneum to the sum of $20 to $50 per day. Mining in and of itself is a fairly passive strategy. If you're using a cloud mining company and you're going in and buying shares and you're buying pools of mining contracts, those are passive, but they require you to check in on them all the time. So I'm sorry, I just can't put that in as a passive strategy. I can't put that in as something like that's set and forget because you don't want to forget that. You actually want to check in on that on a regular basis. Cloud mining does not fit under passive. That is an active investment strategy, but being a miner, that's different. That absolutely fits into a passive strategy because there'll always be something for you to mine. And so from that standpoint, very solid passive strategy. All right, so what I wanna do now is I wanna dive into more active strategies, which this is where 90% of people watching this video will probably fall. But I wanted to talk about this because I really wanna help those people that are more involved in active investment strategies to stretch their brains a little bit and open their mind to what could be possible as they start to make a lot of money in their active active portfolio to move some of that over into passive and to really just add some safety and security into what they're doing, okay? I guess we could also add precious metals in here in terms of passive, because precious metals we will always fall back on. In the community, we have been running Mint Builder Hustle. Mint Builder is basically gives you a Shopify store and gives you an auto ship option for precious metals and numismatic coins. I think 100% that is a very passive strategy. You don't really have to worry about that one. And the only time myself, I'm thinking about gold and silver is I'm thinking about them over time. I'm thinking about how is this gonna grow and mature over the next 5 to 10 years. Numismatic coins don't really start to prosper and see their value for at least 2 years. Some of them you get lucky with, but most of them you're sitting on for a couple years. So yes, for me to add one more thing to the pie, it would definitely be precious metals and sitting on those, whether you hold them yourself or a combination of holding some and having a vault hold on to the rest. Okay, now let's get into active investments, okay? Okay, now we're talking about an active portfolio. And I know what many of you are thinking already.
Jay, can we do a combination of both?
Absolutely, and I would suggest that. My job here in this video is to just give you the pieces, and I'm assuming that you're gonna be able to put together the pie for yourself, okay? So active would be any ICOs. To be an investor, this is you buying coins when it's in ICO phase. This is anything lending platform. We have cloud mining. Instead of adding it in here, I think what we'll just say is we have micro and macro. I'll explain what both of those are. And we could even say that we have lending ICOs outside of active lending platforms. So we have lending as well. There are really 3 categories within the ICO space right now. Day trading, now this is manual or with a bot. Then we have swing trading. I don't know if I should be splitting this out like this, but I will. Swing trading is when it's more than one day, so you're swinging multiple days. And then we could even go short-term positions as well, okay? These are all fairly the same, but I'll break them down for you. Whoop, out of the frame. So these are fairly similar. I'll explain the differences in just a sec. So ICOs is initial coin offering, and there is 3 types. There is a micro cap, what I call a macro, that's not a good word to call it. I guess you could call this a regular ICO, and a lending ICO. This would be a lending platform. This is where you lend, you stake. Some of them, they allow you to mine, but this is like your BitConnects, okay? Macros is like Ethereum, and micro would be like XP, a super small cap. These are what most people call dog coins. There's a ton of money to be made in these though. B3 would be one. Electronium actually fits into a micro. All 3 of these, you need to start putting some weight on in your portfolio, because I believe that there's a place for all of those in a strong portfolio, okay? And we could manage risk. It's not that macro or like your Ethereums are less risk, but I think in this scenario they would be. Micro and lending I think are very similar. What can happen with a micro cap coin is that basically it never takes off. And so even though you get a ton of them for a penny a piece or 10 sats, 20 sats, they never really go anywhere. And so it doesn't matter. We've had people in the community make tens of thousands and hundreds of thousands of dollars on micro coin plays. Macro coin, we have a couple people who are early investors that have told us into Ethereum, and they made a load of money. I mean, hundreds of thousands of dollars. And in lending platforms, myself included, hundreds of thousands of dollars on the lending platforms. So all of these pieces are great. Like, I think that most people get caught up in the, is it a legit, is it a Ponzi, and who knows what the climate is in the marketplace when you're watching this video. But for the most part, there is a divide down the line, which is like between bodybuilders and powerlifters, and you're either on the lending side or you're on the legitimate coin side, and you're in this. And these guys mostly don't like these either, and they don't like these. Lending platforms is anything that is not in the ICO phase of a lending platform. Lending platforms have ICOs too. And you can get in on these coins for 50, 75, 85 cents, sometimes even upwards of $1. But these can go up into the hundreds of dollars just like these can. This is much more rare to see that, okay? And I don't know the statistics if we were to break down how many lending platforms there are. There's not that many still that have lasted either. And how many of these have gone up over 100 versus how many of regular cap coins have gone up in the hundreds of dollars. I don't know what the percentages would be. This is a fairly newer thing though, I will say that, the lending platforms. And micro coins, again, I don't know what that breaks down to be. If you want to figure that out, I'd love to know that data point. Lending platforms would be ones that are running. At the time of shooting this, BitConnect is still one of the biggest players on the block. Devor is making this run up. Hextra is back and very strong at this point. And there's another, I'd say 7 to 15 that are coming out of the gates, out of ICO right now, into becoming a lending platform. They're launching on exchanges, and now they're starting to spread their wings and really take off. So what I wanted to talk about just really quick within lending platforms is how to set yourself up for the best success here. Lending platforms have a lot of variables going on. They have usually a staking component, a lending component, and then I can hold the coins. Now, to be a market maker, you need to own on both sides of the fence. You need to be a buyer and a seller at all times in case something changes in that market, in that coin. What I would suggest with these lending platforms is you could even take that a step further and hold coins on the platform and hold coins on an external exchange as well. So if anything ever were to happen with the website itself, with the platform, you could dump those coins onto the open market. A lot of these are getting listed on not so popular exchanges like coinexchange.io, so you have to watch yourself in terms of your fees and how easy it is to get things in and out of your wallets there, but this is an option. Another way that you could safeguard your coins is most of these have an offline wallet. Now that offline wallet is also used to stake, but what you could do is you could 100% just keep it in your offline wallet and use that as your storage, because then from the offline wallet you could dump it out onto the exchange and sell it if something were to happen with the coin, right? In this sense, we want to grab a little bit of everything. We want to be holding onto the coin, staking if we can, and absolutely lending it as well, because we get daily interest in every single day. So if I were to go and lend, $10,000 and I'm making $100 to $200 a day, that's more money to hold more of the coins, to position myself as more of a market maker within just that one platform. And there's now dozens of these platforms that are popping up, okay? I did miss one thing on here, which is Masternodes. Let me add that. Okay, so Masternodes is another one we'll talk about. This is basically staking, but outside of lending platforms. So this is like regular cap coins that allow you to stake and create a masternode. A masternode requires a minimum of an amount of coins to be able to create a masternode. And there's a whole set of rules and I guess criteria to pick great coins to become, to open up a masternode on. But this is a very passive strategy. I like this very much, just like I like staking. So think of this like staking, but outside of lending platforms. Again, another great piece to your arsenal. Should be another piece of the portfolio. Next, cloud mining. And there's been a huge shakeup in this recently, but this would be like BitClub, Genesis Mining, Hashflare, and USI Tech. Depending on when you're watching this, again, some of these variables might change to a degree, but those are still the big players on the block. And what this allows you to do is buy a mining pool, a mining contract, and you collect a small amount of money based off of what gets mined through you, through what you own, your shares, if you want to call them. Some of these, they're all quite the same in terms of what you're paying for and how much hash rate power that you actually get. They're all pretty much the same. The only difference is some have 1-year contracts, some have lifetime contracts, some have been around a lot longer. BitClub's been around since 2014. USI Tech just shut down all of its operations in North America, that's Canada and USA. Who knows if they'll bring that back? But these are all things you need to look at when looking at these platforms and lending platforms. I'll talk about more of this at the end of the video, but lending platforms are gonna start cracking down and forcing more know your customer protocol, and they're gonna be shutting down to countries that are being more scrutinous towards lending platforms. America would be one of those, okay? So cloud mining, that's what you're looking at there. Again, this is another piece because this is so different than everything else we're talking about here. It's more of a fundamental piece, but it's still active because I have to check in and make sure that everything's going okay with my contract, I'm getting paid out, and I need to be able to create, I guess you could say, a rolling average here so that I can track this in my portfolio so I can track my gains. Here, again, you're gonna have to check in on these, not every day, but at least a couple times a week, you're gonna have to check in on these. ICOs, you need to have your calendar filled up, make sure that you're aware of when the ICO is actually starting to launch, have your money in place, whether they accept Ethereum, Bitcoin, Bitcoin Cash, have it ready, have it in place for all three of these, okay? Know which exchanges you need to be on for these, where you gotta have your coins, and be ready. With this, yeah, I said you gotta check on this at least a couple times a week, and understand that these are largely affected by regulation, okay? One could argue that all coins are, but these will really face the most regulation in 2018. Cloud mining, I think, won't have the biggest shakeup, I think this will. Cloud mining, I see that really in line with ICOs and coins. Now, day trading, swing trading, short, long positioning. This has more to do with a margin account and trading on something like Bitfinex or BitThumb. But we could say just the same that a short position would be, I want to hold on to this for maybe a couple months or a couple weeks. And a longer position would be maybe up to 12 months. So you could look at this similarly, okay? Swing trading would be, I'm in a trade for a couple days, and day trading is I'm in and out, mostly scalp trading, which is like I'm in and out of markets, I'm in and out of pairs very quickly, scalping a quick 10, 20, 50, $100. Keep an eye on your trade volume and make sure that the fees that you're getting hit with isn't washing out the actual percentage gain that you've got. We've got tools for all of these in the Crypto Junkies community. We've got trackers for it, and we've got tools and training to make everything on here, on this list, that much easier. Well, you kind of move position. Okay, day trading, we're talking about manually doing that and with a bot. So a bot would be something like the Haas bot or Haas online bot. Profit Trader is another one. And all these do is based off indicators. They will execute trades on a semi-automated or fully automated fashion. Downside to this is bots aren't perfect. You'll have to constantly keep an eye on this. Again, making it very active. Also too, each set of indicators and strategy will depend on what the coin pair itself is doing. Some work really good when a coin is running laterally or just going horizontally. Some work really good in flash or crash markets. Others work better on uptrending, others work better on downtrending markets. So you're gonna have to make sure that you set your bot accordingly. And it will be a big trial and error area. So will manual trading of any sort, really. This will be a lot of trial and error because you're learning what's called technical analysis or TA. You're learning how to read charts, you're learning how to read indicators and where things are going so that you execute trades properly and you get in and get out at these margins that you're just looking to scalp. Swing trading, again, sometimes you get forced to go into swing trading and hold something for longer than you want to because you executed a bad trade up here. But swing trading usually constitutes trading over a couple days. Again, all the same skill sets that a day trader is required to have, swing trading is required. Long and short positioning, not so much, but you still need to know entry and exit points on your short and long-term holds in your portfolio, meaning that you don't want to come in on Ripple when it was $3 and now it's $1, and now you're forced to hold on to it or cut your losses. You'd want to be able to see that there was this correction coming up and you would have wanted to be buying in right now, and let's say it's $1, and assuming that it's going to go up to $3, then you would start pulling out profit, okay? You also need to be picking out your profit windows with a strategy like this. And lastly, Masternodes is what I already talked about, which is staking, but for micro cap coins and just regular market cap coins, okay? Not a lot of regular coins offer Masternodes though. If they do, it requires a lot of coins, 100,000, 10,000, etc. All right, so let's talk about probably the biggest thing that we will all face in 2018 is our portfolios. We will have to get smarter this year, and we will have to be very agile and very aggressive. And what I mean by that is there will be changes in regulation happening this year. And my estimation is the big areas that will see it is on exchanges, ICOs, and lending platforms. And what that's going to force us to do is make different and smarter and better decisions. The countries that will probably be hit the hardest will be countries like America, where there will be the steepest amount of regulation occur within that country, okay? Now, what you want to do to maintain your sovereignty is entirely up to you, but I will say that this is going to be the year of regulation, and your portfolio and your strategy should really reflect that. And what I mean is you should really keep tighter percentages and not be so lackadaisy with what and where you're allocating your money to. And when things happen, be able to have yourself a plan B and a plan C within the platform, within the coin, within whatever you're doing to be able to get out still alive. So that's simple things like having multiple exchange accounts fully verified, know your customer done, up and running, okay? That would be having multiple offline wallets, multiple ledgers, multiple paper wallets, like as much as you can. Get the downloadable wallet for that coin, get the paper wallet for that coin, keep track of your keys, keep track of your backups. All of those things will be easy measures and easy steps for you to be ahead for when things start to turn on you, then you can quickly get out of those positions, quickly make a change out of those positions, okay? There's some other things you could do as well, but for the most part, you want to really box what you're doing with crypto and make sure you stay tight on that. Stay tight on where you're pulling all your money in from so that you can keep track of taxes, because as of right now, every single move over from exchange to exchange is a taxable event. It's gonna be a pain in the ass. Okay, so get your ducks in a row, figure out what software or how you wanna track this thing, get all that lined up now. Before you even get into a coin, get the wallets downloaded, get your keys, get everything that you need so that you, again, like I said, could be ahead of the pack. If the platform that you want to get involved in with a lending platform has an offline wallet, has a lending, has a staking, offers and allows you to exchange out on another external exchange besides the internal exchange, set those things up. Take the time to be a true market maker in those areas. That is all I have for you in this video. I hope this has helped you make a better plan for 2018, and be on the lookout for more portfolio training and updates to this video coming out this year as things change, as the climate of cryptocurrency changes this year. But mark my words, this will be a huge year. There is so much money to be made this year, and I want you to be in on it. So whether you decide to come into the full community and join us, or just continue to be a subscriber and watch the channel and watch the videos that we keep uploading, either way, I think you're benefiting tremendously. So thanks so much for tuning in. Hit the like button, subscribe if you haven't, hit the bell notification, and we'll see you very soon in a future training video. Bye.